What is going on, my friends? It is Hootmoney here with another video for you guys today. Indoor sunglasses engaged. Today we're going to be talking about redbox or RDBX stock, as it has been the talk of the town. I've made a few videos on this as of recently. I've mainly been covering TRKA, sprinkling in some RDBX videos as well into the mix. So I wanted to bring you guys the update as of today. So drop a like if you guys enjoy this content. If you guys wanted to check out Hootmoney trade alerts and bag up with Hootmoney and other VIP members, it's that first link in the description down below. But with all that being said, let's just jump right into the content of today's video. So let's just jump right into the juice. The Ortex data, absolutely absurd. 172% short interest and 810% cost to borrow. That's all you really need to see here to know that this thing is absolutely insane. Also, obviously, on that threshold list. Now, there has been some discrepancy over the free float of RDBX. Ortex reports it at 1.95 million shares right there. And we have other sources such as Delusion Tracker and S3 Partners, which is another pretty credible source, reporting at 8.26 million shares. Now, Ortex did actually do a deep dive on this information, and they posted this as of today. We've received numerous inquiries regarding RDBX free float. They essentially said that they have confirmed this number right here at about 2 million shares. And honestly, regardless of whether it's at 2 million shares or 8 million shares, it's still pretty high short interest. We've got S3 Partners showing an 8.82 million share free float, but that also puts it at 55% short interest. So regardless, it is still pretty high, and it's not necessarily the number of short interest, 55% or 172%. For me, it's more about the sheer number of short interest, the obvious cost to borrow, and how deep in the whole shorts are, because at the end of the day, it's going to be hard to get that accurate float. And even if it is a little bit bigger, it doesn't mean this play is not set up to be an absolute monster. So at 810% cost to borrow, within like a month and a half, short sellers should be down over 100% on their investment. Now, we started talking about this around like May 13th. It's been almost a month since we started talking about it again. Well, we started talking about it way back here in April, right? But at least for this second leg, we started talking about it earlier in May, and it was still super high cost to borrow back then. We can pull it up. The cost to borrow was absolutely ridiculous, like 445%. So these shorts have been paying for it, right? They have been paying for it, and the share price has increased as well. So there is more pressure than ever for shorts to actually cover at this point. In most of these shorts, if not all of these shorts, are in losing positions on this stock, as the stock ended up hitting a new all-time high today at $11.32. I'd like to quickly thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker that does absolutely zero payment for order flow. They're running a promotion right now where you get a free share of Lucid, which is currently going for around $20 per share with a net deposit of $100. This only lasts for the month of June, and they have double probability to get Google stock on top of that. So you also get 2 free stocks if you deposit that $100. You'll get 1 stock valued up to $2,500 each, and another stock valued up to $2,500 each. So that's where that double probability to get Google comes into play. That's only got 10 hours remaining on it. They also give away free level 2 data. So if you guys wanted to check out Moomoo, again, you get a free share of Lucid and 2 free stocks valued up to $2,500 each. The link is below in the description if you guys wanted to check it out. And with that being said, let's get right back into today's video. Now, the big caveat to this play is that this $11.50 level is notoriously hard for it to break through, as there is $11.50 warrants for 2x the float that X3 Partners is reporting, and 8 times the float that Ortex is reporting. So the $11.50 level is notoriously going to be an extremely hard point to breach. Also, the 100% fib level or 0% fib level right here is at $11 as well. So that's another psychological level to break through. The other caveat here is that they will be receiving 0.087 shares of CSSE in a merger for RDBX. So once the merger does go through with CSSE, they will only be receiving essentially 0.09 share. Like they'll be receiving like 70 cents a share. So it doesn't really make sense to be buying RDBX fundamentally at $10 per share. If you're buying it right now, it is simply for a short squeeze in the stock, as shorts are burning and they're pretty much in a position where they have to cover or else they're kind of screwed. At this point, over 100% short interest is being reported on RDBX. It's getting many different big names to report on this. I've seen different sources report on it. I've seen different opinions on it. There are people that are saying that CSSE should authorize an at-the-market offering on RDBX, since obviously the share price is going for way higher than what it's being fundamentally worth. However, the people that are against the play in RDBX, they're not necessarily the most short squeeze-esque type people. They're more so the type of person that you're going to see being like, I don't know, what's the term for it? Hedgy. But regardless, I mean, they're trading off of fundamentals, and you have to understand that RDBX is only really worth like 70 cents per share when it comes down to it because of that merger agreement. So it is definitely a risk to follow, but also know that just because it's only worth $1 per share in that merger agreement doesn't mean it's not a good squeeze play, because shorts are down on their money. Shorts are pretty much in the hole. They're paying hand over fist every day to borrow this stock, and they probably should cover the stock, right? They should probably cover their short position to avoid further losses. So, with all that being said, even though the fundamentals make absolutely 0 sense, you have to understand that this is still a very solid, technically set up play. So market makers are also just shitting out short exempts on this stock like it's absolutely nothing, which is essentially a naked short on the stock. And if we do look at the S3 float and compare it to the actual free float, the S3 float right here actually takes into consideration synthetic shares, or shares that have been loaned out more than once, short exempts, and all that stuff. So if the normal float is 8 million shares right now, S3 is reporting almost 14 million shares. There's about 4 million excess of like essentially synthetic shares floating around in the market right now, and it's definitely not calming down because, well, there are like hundreds of thousands of short exempts almost every single day, and I can't wait to see what happens today. I mean, there was a period right here on May 26th and May 25th where they did like almost 300 or 600,000 short exempts within 48 hours, and it's just absolutely insane. And all this really does is add additional buying pressure to the future. It's kind of like kicking the can down the road, what the US government does. But essentially what happens is you short exempt a stock. It's essentially a naked short, right? That needs to be covered within 6 trading days, or you pay an absolutely enormous fine. So this only really adds fuel to the fire on top of what we're already seeing here with like that 800% cost to borrow. So shorts are in no position to be greedy right now with RDBX. I mean, it's an absolutely insane play. Just understand the caveats here, which is obviously that CSSE merger and the fact that they've got warrants priced at $11.50 per share. Now let's get into the warrants right now, because there is some fine print that we have to go over. So they may be exercised at a price of $11.50 per share. However, the company can redeem the public warrants, which does add some speculation to the mix, because if the company does redeem these public warrants, well, then shorts have no more ammo. Now, first things first, let's just think about it this way. The stock was trading at about $6 per share, and the company goes through with a merger that priced their stock at about $1 per share. So that's the first thing to take into consideration. The company doesn't really care about their share price. It's obvious they went through with this merger anyways. So if they were to redeem the warrants, like it does say right here in their latest 10Q, that would mean that the company is doing something because they want their share price to go up. However, they're already doing this merger, which prices their stock at about 70 cents per share. So I don't think they're likely to redeem the warrants, in my personal opinion, right? I think they're more likely to just let those warrants get exercised. That's just what I'm thinking right here. However, there is a way for them to actually take these warrants out of trading, and they can essentially do this if and only if the last reported sale of the company's Class A common stock equals or exceeds $18 per share for any 20 trading days within a 30 trading day period ending on the third trading day prior to the... Okay, so what this essentially means is that the company's share price would have to exceed over $18 a share for over 20 days within a month. And with the stock trading at $10 per share right now, it would have to go up 80% for these to even be redeemed. And with that, you don't even know if the company is going to redeem them because they obviously don't care about their share price. Doing some quick technical analysis here, you guys can see it is a little bit overbought here on the weekly chart. We still got a green RSI. We're still looking good in terms of that. Daily chart is also looking absolutely phenomenal right here with the red money flow coming up on Market Cipher, followed by a green means go dot as of yesterday. This is usually a huge sign that a stock or an asset or anything is going from a long-term downtrend and starting a new uptrend right here. So the daily chart as well is looking absolutely phenomenal. Moving into that 4-hour chart, this is where it's a bit spicy dicey. Very green money flow right here, and it's overbought. So after today's price action, I definitely do expect at least a little bit of a consolidation or pullback before it can keep going. It has been following this trend line right here, so potentially there is going to be somewhat of a consolidation back to that trend line right there. And we can see here on the hourly chart, it's already starting to come back up, forming a little bit of a bull flag. And we'll see how it ends up playing out right here. I'm definitely thinking a little bit more consolidation here before the next leg up. However, this is a very, very, very crazy short squeeze stock. It would not be put behind me if this thing just keeps running up and going crazy beyond belief, just based off of the setup here. However, there still is that 1150 warrant wall, and we still obviously are a little bit overbought on these shorter time frames. So I think consolidation over the next few days, maybe for the rest of this week, is the likely situation. However, at the end of the day, this is a super volatile stock, and I'm not just going to try to sit here and act like I can tell you what's going to happen just by reading the chart. Looking at the unusual whales call option activity, it's been absolutely insane. If we're just looking at these floor trades that have been coming in, it's been ridiculous. We have calls and puts here. No puts are being traded, excuse me. A ton of calls are being traded and extremely high premiums. This is usually what happens when a market maker has over leveraged themselves and they have to essentially hedge using enormous amounts of call buying. And as you guys can see here, that's exactly what's happening. I mean, these look like they are market maker trades. I highly doubt retail investors are the ones throwing in millions of dollars into call options on these stocks. It just doesn't make sense. That just doesn't happen. These are market makers hedging risk. It has to be that. It has to be that because it's just way too much money, right? And we've seen this numerous amounts of times before. A lot of these de-SPACs plays, such as SST, BRCC, when they have these liquidity crises before their S1s go into effect, they also you'll also see similar hedging from market makers. So this is a liquidity crisis. If you see an options flow like this, understand market makers are in a terrible position and they are likely hedging some type of enormous short position. Perhaps these short exempts, right? But it pretty much just shows that you are in a liquidity crisis. It doesn't necessarily mean that the market makers are right, since they are hedging. They're not necessarily placing these bets to be right and to print tendies. They're more so doing it to hedge a short position, maybe a naked short position, something like that. We've got a 90% bullish premium, mostly going for the 617 expiration and the $5 strike price. As you guys can see, the daily flow breakdown, we have reached a new high in call option volume on RDBX. Obviously, looking at that option flow, it's been absolutely ridiculous. Now, in my experience, when the option flow is at an all-time high, it's usually a signal to sell rather than to buy. However, if it does end up dipping down, call option volume goes back down to maybe like 60,000, 50,000, that could be the opportunity of consolidation where you could get back in on the play. Another thing I wanted to show you guys is the implied volatility. So pulling up this historical implied volatility, it has been at pretty much over 300% since options did start trading on it. It's at about 400% right now. When it did get over this 400% level, it did suffer a significant pullback, and this was right after options started trading on it in the first place back here at the beginning of May. We potentially could be seeing a similar thing come out of it right now. I mean, 400% implied volatility, no matter what stock it is, whether it is the best short squeeze in the world or the S&P 500, 400% implied volatility is inherently risky. So do your due diligence. Don't just YOLO into call options because everyone's saying that it's going to print and that this is going to squeeze. Do your due diligence because it's risky and you can get IV crushed, and a lot of things could end up happening simply because that IV is priced super high. And then last but not least, we'll look at the gamma exposure for RDBX. We already saw on the flow that it was pretty much all call options being traded with 89% bullish premium there. If we're looking at the gamma exposure, which basically shows how much this stock can gamma squeeze, there is a ton of juice here from $7 a share to $10 a share. There's going to be a bit more juice from $12 to $13 per share, but this also does show some downside risk because while this can perpetuate the stock up very quickly from $8 to $10 per share, if the stock does end up dipping down below $10 per share, it could perpetuate it right back down to this trend line that we're going to extend right here on the chart. And then it would probably be likely that you'll see that next bounce at that trend line right there, because that also is kind of in line where the gamma exposure cools off a bit around that $7.50, $8 level. So I'd say right now your biggest risk is the fact that on shorter time frames it's a little bit overbought, and you potentially could see that retracement to a max of about $7.50. If it breaks down below $7.50 over the course of the next week or so, that probably signifies that there is some more downside to come, in my personal opinion. But it's not financial advice. Honestly, it looks like there's more upside to come. The only thing really in the way are those $11.50 warrants. I'd like to know what you guys think of that. But that's all I got for the video. I hope you guys have enjoyed. As always, drop a like on it if you guys did. Subscribe to the channel if y'all are new. Check out Hootmoney trade alerts if you guys want to come and bag up with Hootmoney. That's the first link in the description down below. The going rate right now is $25 a month for Hootmoney trade alerts, but it does increase in July to $50 a month. So if you want to get grandfathered in to the $25 per month rates, then you have to sign up within the month of June. So that is that first link in the description down below. Also, if you wanted to check out Moomoo, which is the second link in the description, you could get a free share of Lucid as well as up to $5,000 in free stock with a $100 deposit on their platform. That's the second link down below if you wanted to check it out. Anyways, my name is Hootmoney. I am out for now. See you guys tomorrow morning at 9:15 a.m. for the Market Open live stream, and I'll be signing off. See you guys later.